Bloomberg Audio Studios. Podcasts, radio, news.
Joining us from the land of Schlitz and Pabst Blue Ribbon, Jim Bianco, I believe, is with us right now. Rich, do we have Mr. Bianco? Okay, we do. Thank you, Rich Truman, for that this morning. Jim Bianco is nailed the sticky inflation call. We get an update. Jim, like good news this morning, futures up 25. We're getting knocked around here in immense emotional volatility. What is the Bianco view on inflation?
That it's still sticky and that you're starting to see signs that even people are starting to become nervous about it. The surveys like Michigan and the Conference Board are showing that people are expecting even higher levels of inflation. The Fed might call that being a bit unanchored. And I think that it's going to, stay with us and be a problem. Now that I've said that, it's a 3%, 3.5% problem. It is not an 8, 10 or Zimbabwe problem. But even still, a 3.5% problem means that interest rates, even though the bond market has rallied down to 4.3, we don't have a whole lot more on the downside to go if we've got that kind of sticky inflation. How
will the Fed adapt to our new, I love this phrase, fiscal space? How does the Fed adapt to, forget about the legislation overnight and the ramifications of X numbers of zillions of dollars of debt added on. Where we are now, how do they adapt to our fiscal policy?
Well, I'll answer the question by saying I hope they adapt, because their attitude right now has been, well, we have to wait and see, and we have to sit on our hands and see what happens with tariffs and see what happens with the budget, and then kind of assess it from there. And that's why the market doesn't expect the Fed to move until June at the earliest at this point. So I think the Fed is going to have to learn to adjust that there is a plan out there by this administration, and it isn't just a bunch of disconnected things like, tariffs or a sovereign wealth fund or demanding that Europe pay for more security so that we could relieve our own defense budget. It's what I've been talking about for the last couple of weeks. It's the Mar-A-Lago plan. That is the plan. And we're getting all the phases of that plan. And the idea is to lower the value of the dollar, is to bring the U.S. into a more competitive position, is to relieve us of the debt burden and bring down interest rates. But right now, the Fed seems to think like there's kind of three random things that are happening side by side and hasn't put that together. Once they do, hopefully they'll understand the plan.
So it's interesting, Jim, Torsten Slok over at Apollo is out with a note this morning and just kind of talking about the reverse of globalization. He calls it segmentation, and talking about how that puts structural upward pressure on inflation, goods, inflation in labor, keeping interest rates structurally higher for longer. How do you think about that? Is that something that could be a real headwind for global economy?
Oh, I think it is a headwind for the global economy, and it will be for both that and inflation. Torsten's right about that. It will put upward pressure on inflation. And if you look at the global economy, especially if you look at the European economy, they're not doing very well right now. The Chinese economy is not doing well at all right now. The bright spot in the globe is the United States. At least at the top line, the United States economy is stronger than most of the other developed countries, and it continues to do well. But that segmentation, or that deglobalization, as it was called before that, that's been underway now pretty much since the financial crisis and got accelerated post-COVID. Yeah. And I suspect we're going to continue to see that happen. That's the impetus behind tariffs and why President Trump keeps talking about we have unfair deals, is that he's trying to correct that. But that means we're going to see more segmentation.
Jim Bianco, we've had a series of conversations. If you're just joining us, James Bianco with us from Chicago. Thrilled he could be with us with Jim Bianco Research. Jim, I look at the last couple days of conversations, and a lot of people are, but we're cautious, and it's the politics and all that. A headline out 3 minutes ago: Elon Musk will attend Trump cabinet meeting today. That according to Fox News. Jim Bianco, how do you participate in the market, in the stock market, given the news flow we're all having right now?
Well, that is the thing you want to definitely get yourself, away from, is getting bogged down into all of these situations, whether, there's this or that's happening, or even the Mar-A-Lago Accord. I think you'd want to take a longer term perspective and to decide what you like, what you don't like. Now that I've said that, I'll give a note of caution. The other problem that the stock market has, while I think it's having indigestion more than anything else, is we started the year with very high valuations in the market, and the Mag 7 stocks had extremely high valuations. They need everything to go right when you have those kind of valuations. To put it into, in baseball terms, you need to score 8 runs. And if you score 6 runs, that's not enough, even though 6 runs sounds like a lot, because that's the problem when you have high valuation. And that, I think, is why we're starting to see people be more cautious more than anything else, is those type of issues. And it gets kind of wrapped up into, the news flow of the day.
Jim, we're about 90% of the way through the S&P 500 reporting season here. Obviously, NVIDIA, big name after the close. What have you learned from the earnings?
Yeah, NVIDIA is the biggest name, but the earnings numbers have looked great so far. The year-over-year earnings numbers for the fourth quarter to fourth quarter for the S&P 500 is running around 12 or 13%. That's been a very good number. Even sales, which is kind of analogous to nominal GDP, because they're like trillions of dollars of sales,
Agreed.
is 5.5%. And so these numbers have been looking very good. Now that I've said that, remember that those are the numbers they reported. They don't have much forward guidance, but even the companies are offering guidance that is somewhat positive right now. So that is a good thing, but that is also running into that high valuation thing. So even though those numbers might be good, they might not be good enough.
Jim Bianco, way too early from Jim Bianco. Thank you so much for joining us.